Anthony. Now, our highly anticipated guest is here, Miss Sharon Tumushabe. She's a vice investment advisor, I should say, at Xeno Investment. And she's a very resourceful person when it comes to investment advice with a vast experience in investment and saving. You're most welcome, Madam Sharon.
Thank you, Anthony. How are you?
Very good. We're always glad to have you here.
Thank you for having me back again today.
Yes, yeah. So now, yesterday, I was part of your class. I will start with that. And I loved the class. But with 36 billion worth of investments, and over 21,000, if I'm not mistaken, people that you're handling. How do you do this at Xeno?
So basically, it's been a very humbling journey. It's 5 years in. We celebrate our 5th year this year. Yeah. And having over 21,000 customers trusting us with their money to be invested. It's a very awesome journey that we've moved. 36 billion, yes. First Ugandan company to do this. So we believe that probably by end of the year, we can double, triple this 36 and see ourselves somewhere higher. So basically what Xeno is doing for individuals, companies, groups of people that are investing together, it's mainly financial advisory first. So before you start investing, you need to understand why are people putting money away. So we help people come up with a plan, okay? So after somebody has a plan, and then you're able to understand their circumstances, you're able to understand what their goals are, why they're investing, you get to assess their risk appetite, their tolerance as well. And then we go ahead and recommend a diversified portfolio that will help them attain or achieve a certain goal that they want to achieve. So usually our customers come with either short-term goals, mid-term goals, or long-term goals. So at Xeno, we look at you as an individual, we look at you as a unique person, and then we craft a tailor-made solution that suits your needs. And then we go ahead and help you invest the money that you're saving. So besides the planning, we help you estimate how much you need for that target or goal that you've set for yourself. And once you're able to know what you need to do, let's say on a monthly basis, we go ahead and invest these savings so that we help you reach that goal much faster.
Yes. Talking about goals, recently I started, but I have not yet finished the process. But there's a challenge that many of my friends are facing. They ask themselves the goal. I'm 20 years old, probably still studying or something like that. And my goal is to buy a car. Is this the best goal for me? And then maybe I'm 25, I've just started working, and my goal is to save for retirement. Is it a little bit too early? So all these questions keep bothering people, and whenever they get to that part of choosing their goal, it gets challenging. So how do you help someone choose their goal? And what do you think is the best goal anyway?
Anyways, so goals. There's a reason why you wake up every day, and that's where we start from. Why do you come to work? You're coming to work to be able to earn money. So you're going to use your skills to earn a living. But what pushes you to actually wake up every morning to go to work? There are reasons. I'll use myself. My number one reason is to make sure that I am living a good life. I'm able to feed myself. I'm able to take care of my expenses monthly. I'm able to go ahead and foot my bills on a daily basis, okay? So that is my reason. So my goal then becomes going to work to be able to meet my day-to-day expenses. That's number one. So besides that, I also have another goal, which could be school fees, okay? So educating my children to make sure that they have a good education, to make sure that they are they're doing well, they're healthy. So my first goal is living. So I have to feed, I have to be healthy. So that's one of the reasons I go to work. And then I have beneficiaries, I have children. So these goals shouldn't be something that you really have to think about so hard and make it feel like it's something very strange or out of this world. Your goal can be as little as buying a car. So I don't want to use a taxi. And it's okay, because that's your goal. So we look at you the way you come to us. And the platform has various goals, but the goals that are on the platform are maybe 8. So they may not take care of everybody's goal that they want to invest for. But then we went ahead and added an extra one called customize your own goal. So if it's your car, you can name that goal a car. So depending, If it's marriage, you can name that goal marriage, okay? So it doesn't have to be only retirement. So you mentioned someone who is 25 who is out there asking themselves, do I really need to start early? The earlier you start, the better. Because if you wait for so many years to pass and then you're thinking of retirement at 40, then it means you're going to need substantial amounts of money to be able to afford that kind of ideal retirement that you would really enjoy. So starting early is the best thing, because when you start early, then you're going to put away small monies. If you start late, then you're going to need a lot of money. So goals are very important, because then it's from that goal that we are going to now go ahead and guide you on how to allocate your investments. There are goals that need liquidity, like I say, day-to-day meals and expenses monthly, fuel, and all these other things. You need liquid, you need cash near you. You cannot go ahead and say, let me buy land to take care of my day-to-day expenses. That wouldn't be the most ideal or optimal way to invest. So what we typically do is, depending on what your goal is, if it's a short-term goal, so a short-term goal would be anything under 1 year, anything under 2 years. So the way you invest for such a goal, so then my question to the client would be, when do you want to drive this car? Is it in 2 years? Is it in 3 years? So depending on when you want to hit that target, we will help you work backwards to ask you questions like, how much do you have now? From the resources you have, how much are you willing to put aside on a regular basis? The beauty with Xeno is that you're able to invest anytime, any day. And the amounts can vary. You can start with 100,000, the next time you can invest 1 million shillings. The other day you might not even invest at all if you don't have money. But we help you track, where am I now and where do I want to go? So we show you that target. So your target is maybe 30 million. Currently you're at 10. This is what you need to do to get. You're either behind your target, or you need to pull up your stocks and maybe increase on your savings. So having a goal in mind is the best way to approach investments. Otherwise, if the goal is not there and then you're investing for all these goals the same way, it may not be the most optimal thing to do.
You talked about the simulation yesterday in one of your lectures. You said that you have a certain program that helps you simulate how your investments are going to work. How does that work?
So when you go into the Xeno platform, for those that have created Xeno accounts, it's on www.myxeno.com. There's a simulator. And this is available to people that have set up an account. But even though you haven't set up an account, there's at the bottom of the website, there's a point where you're able to simulate. So what does this help? It helps you to plan. And someone might want to say, okay, if I put away 100,000 every month, how is it going to look like in the next 3 years? So we have a simulator that helps you work out what you need to do. So it will ask you questions like, how much are you comfortable to invest monthly? So you put the number, and then it asks you, for how long do you want to invest for? Or depending on what your target is, it will say, okay, for you to get at 10 million, you need to put away X amount of money on a monthly basis. So the simulator is there to give you a plan. And then it will also give you a worst case scenario. How much can you expect after the period that you've invested for? What's the worst case? What's the most likely outcome? And what's the best case? So the numbers we are using here are historical numbers that we know maybe in the last 5 years, this is how the worst case has looked like. And given the current rates of investment, if somebody invested depending on your portfolio mix, this is your most likely outcome. Of course, we do not guarantee the future, because with investments, you're taking risk, but calculated risk. It's not like it's high risk. You're taking a risk to invest today to earn a return in the future. Nobody knows what is going to happen tomorrow, but we are able to use historical data and current data to give you a projection of your best case, worst case, and most likely case should you invest money in one of our funds.
There's another question that many people ask me, that, well, what if I've created an account and I've started this investment, but then maybe my income increases or decreases, anything happens to my income, and maybe I want to keep this and maybe start, if at all my income has increased, start on another, journey to invest for something else, for a different goal. Now, maybe I was saving for a car, but now I say, okay, I think I can save for something else as well. Is there an option for that? So when you set up an account, of course, you're going to start with selecting why are you investing. So let's say for the first time, your goal was owning a car.
and you're almost hitting this target, or you've hit this target. The good thing with Xeno is you can even invest for multiple goals. So today you can say, I'm going to invest for my children's education, and on a monthly basis, this is what I'm putting away. I need to also save for me, because it's you working. So you say, for me, let me also set up a build wealth goal for myself. So then you go ahead and say, I'll put X amount of money into this goal. Or I actually need an emergencies account as well. So you can save for different goals. And we believe that you need to separate these goals. The way you invest for retirement, because retirement is 10, 15, 20 years from now, should not be the same way you're investing for a home that you want to maybe achieve in the next 3 or 4 years. So the allocation should be different. Now that's where now the risk tolerance comes in. For short-term goals, it's better for you to invest in assets that are liquid, safe, liquid. Should you need this money, you can easily get it out. Okay, but of course we know for any investment that is short term, it's going to give you lower returns. But the risks are also low. Anything that gives low return gives you low risk. Now for the ones that are long term, retirement, building wealth, education for maybe university, now those ones you can take a bit of risk, because then that means you have the time to recover. So you can, like for example here, when you come to financial markets, we have equities, shares of companies listed. These are volatile. Sometimes they're in the negative, sometimes they're in the positive. But in between there, should your goal be a long-term goal, you're able to actually go through the volatility. So the volatility will not be really an issue if your goal is a long-term goal versus someone who is investing for a short-term goal and then investing in high-risk investments. Yes.
The long-term, let's talk about, for example, you're saying when you're saving for retirement, it's not going to be the same thing as when you're saving for maybe a car or something. And you said high risk, but I've saved for long-term now. I've decided, okay, I have my short-term goal for getting a car, and maybe a marriage or something, then my long-term goal is maybe retirement. And I go into the risky ventures. Do they remain risky if I give them time? Because you're telling me they're risky, especially in the short term. But now I've given it time. Is there still, do they still hold risk after like 15 years, 10 years? Or actually, I'm sure if at all now I'm in the equity market, I am sure by 10 years, surely. There will be no loss.
Okay. So as a fund manager, of course, we can't guarantee future performance. But as a fund manager, our role mainly is to ensure that every time these assets are not performing very well, we need to actually adjust the strategy. So if we are buying particular companies, if it's telecom, we need to diversify and make sure that we're not only making losses, you know, because we can't keep reporting losses all the time. But sometimes you find that the markets are actually struggling, and it's across. It's not like the fund manager is not doing their job. So for that case, we make sure that we readjust these assets to make sure that after a period of time, let me give you an example for Xeno. Every 6 months, we revise and see our strategy to see is it working the way it should be working. And we keep on, it's active investment. We are not just sitting back to say, okay, if these particular stocks are not performing, or we will sit back and watch. No, there's a research team doing all the research. We are looking at all the share prices. We're looking at the opportunities. We are adjusting the portfolios whenever it's necessary. So that you, an individual who is going to go and invest in that one stock, and then wait for it to give you the result. For us, we have a team that is actively trading on a daily basis. We are buying, we are selling on a daily basis. We are not only investing in one equity or one stock. We are going to invest in Uganda, we'll invest in Kenya, we'll invest in Tanzania. We'll go ahead and diversify for you. So of course, the markets are volatile. But if you're in for the long run, a person who is investing in stocks and equities will outperform someone who is actually investing in the safe assets. So it's always good to have a bit of each. So for long-term goals, invest in some risky assets that will give you growth, okay? Because after a long period of time, these companies usually give back returns. It's not like it's going to be the same way. So there are waves. There are waves where the prices go down. So when the prices go down, the best thing to do as an investor is to invest more money at that time. And then when the prices go up, if you're seeing an upward trend in terms of performance, that's the time to actually benefit from your gains. And if you're in for the long time, if you're in for the long run, you find that a person who is invested in stocks or equities will actually be more happier than someone who's investing in the low risk. So what does Xeno do for customers? We help you diversify.
You do the background work for you.
Yes, we help you diversify and say, okay, for this retirement goal, depending on the times now, this would be the best way to actually mix your assets. If we've been investing more in, let's say, maybe printing, this time we'll say, okay, can we go ahead and invest in maybe manufacturing? Can we buy a bit of manufacturing? Or can we do more of banking? Can we do airlines? So we are there on a daily basis to actually study these numbers and make those decisions on your behalf, but we report to you daily. So we show you how your money is growing, we show you how these various funds are performing, and the customers are able to adjust either to increase on the risk or to reduce on it, depending on what their goals are at every time.
Beautiful, beautiful, right there. We're going into a break. I wouldn't want to go into a break, but we have to. However, when we return, now we talk about exactly what do I need to do. There are various options of payment. There are various, where does this money go anyway? And if at all I have a bank account, can I use my bank account? Can I use my mobile money? All that and more to come in the last segment. Don't go anywhere. We'll be right back.